We start here with Amazon, the last of the FANG stocks to report. And as we just mentioned, the stock briefly touching an all-time high, gunning to be the first company to be worth $1 trillion in market cap. The stock holding up much better than its peers, Facebook and Netflix, both names getting crushed this earnings season, but not exactly killing it after hours. So do you keep buying Amazon here? And is FANG losing its dominance? Guy.
Wow. Keep buying. Well, the answer to the first question is, yeah, I think you do. If you look at Amazon's quarter, what sticks out to me, we've been talking before the show, operating margins this quarter, 5.6%. Distributors looking for 3.2%. AWS is now close to 20% of their revenue. Last quarter is 18%. I think that's trending in the right direction. Obviously, people will come on every day of the week, talk about valuation, how they can't wrap their arms around it, but they continue to put up quarters that are pretty stellar, in my opinion, and this is just another one. And this comes in the wake of, obviously, what we talked about for an hour last night, Facebook. Yeah. So you see how one company can miss badly, another company can just keep hitting it out of the park.
Yeah, and they also have a lot of shots on goal. I mean, the investment they made in Whole Foods, I mean, that's going to come around for them. There's no doubt they've got a huge opportunity there. PillPack, I mean, getting into this, the pharmacy distribution business, I mean, that's going to be enormous for them. We did a report at Count about that and the opportunity if they made an acquisition, what that sort of looked like from a revenue perspective. It's like a $20 billion opportunity in 2020. So there are shots on goal. AWS revenue is accelerating. This operating income number obviously was bigger, and it probably was because their investments were lighter.
Yeah, I think it's important to remember with a company like Amazon that there are a lot of different levers. We were talking about Facebook, and when people are defending it last night, down 20-some%, they talk about all these levers that haven't been pulled. Well, they don't really have a plan to do that now. They have to fix their main lever right now. And Amazon, obviously, here's a company that just printed $53 billion in sales in the quarter. And you know what? Net income was about, $2.5 billion or so. I mean, this is not something that's like so impressive here. I'm kind of surprised the stock is making a new all-time high in the aftermarket. I mean, the revenue guidance they give, yeah, it was a little light, and they'll probably beat it. But I don't know how you could say, oh, you should buy this stock at 1870, and just unless you're one of the true believers, and if you were going to have a reset at some point, you weren't going to sell it, then buy it here. I mean, it's just not the game that
the stock was down 3% during the regular session, so it's up 3% or so in the after-hours session. It's sort of just a relief. It's like, oh, you know what?
2 days ago.
It wasn't Facebooked.
It wasn't Facebook.
Right.
It was not Facebooked at all. I mean, the mix is changing here in a very favorable way. You're seeing acceleration, not just growth, the rate of growth accelerating in AWS. The margins are better there. They're touching on running it more efficiently. So and they think they're in really early innings. So that's a pretty huge part of the story.
Yeah, I mean, I look at it and say, I don't think it's just about, I mean, Dan hits the nail on the head. We sort of aren't like blowing out the quarter. We're not seeing real acceleration here in price action after the close. We're getting back to where the stock was. The fear today about what if this is another Facebook, what if this is another Netflix, obviously pressured the stock. But I think the narrative here is really hasn't changed much. I mean, I still think they're going to make investments. They're coming into a quarter where heavy spend is going to pick up in Q3 because they start to get their fulfillment centers ready to deploy for the holiday season. I think we're in a period right now where you could buy this stock still very comfortably.
Really? Very comfortably?
Yeah,
it's up 60%. It's a $900 billion market cap company. We just had this kind of sentiment blip yesterday where it really was, I think, listen, I think what happened in Facebook yesterday was very healthy. I think it's important for investors to remember that these stocks are subject to the laws of physics, this handful of stocks. So the fact that this stock is not all over the place or it's not down 10+% or anything like that, that's fine. But, at a new all-time high to come in and establish a new position, I think it really makes sense to wait for these sorts of resets. And I think all of these stocks have been very volatile. Apple, if we're talking FANG with 2 A's, had a 15% peak to trough decline at one point, came all the way back. You get your opportunities to buy them. I don't think when the news is out there after a quarterly print, trading an all-time high is the time to do it, or the day before, like in Facebook, when it closes at an all-time high.
Dan brings up a good point, though, in terms of the broader market. I mean, Facebook, we talk about the market cap of Facebook. A stock like that goes down 25%. We sat here, it was over a 20-minute period. What does that say about the potential for the broader market to have not a move of that magnitude, but a move of that speed, with like 5 to 10% in a day. If Facebook can move like that with the speed and the acceleration that we saw, who's to say it couldn't happen in the broader market?
The counter could be that Facebook moved this much and the market's barely moved.
Which absolutely emboldens the bulls. I get it 100%, but when you see a move like that, you have to take notice, I would think. If Facebook can move 20% in 20 minutes, What does that say about the broader market? An ETF-laden broader market, by the way.
But you don't feel that that's so idiosyncratic to them? I mean, look, to me, the idea that Google was up today is kind of astounding. I mean, you know, Amazon down.
So was Netflix. I mean, barely,
yes,
just barely.
barely.
But the ETFization of the market, maybe that impact was overblown this whole time. I mean, if Facebook can go down 20% and the rest of FANG can be okay, doesn't that tell us that maybe we were worried about nothing?
Well, I think the ETF, whatever occasion that you're talking about, I think
Nobody knows what the word is.
I don't even know what it is. But it's really important. I mean, I think what Guy's getting at, if there was ever a reason where investors in all 5 of these names that make up, including Microsoft, that make up $4 trillion in market cap, if they all headed for the door at one point, then you have a situation where the whole thing could kind of snowball on some of these other sectors. Let's not forget, okay, and I don't know if you guys saw Mike Wilson on the halftime report today from Morgan Stanley. He made a really good point that there's a rolling bear market, and Scott pushed back on, well, look at housing, look at autos, look at, these are 2 of the most important industrial and you know, in manufacturing and all the stuff that's related to them. They are massive bear markets. Financial stocks are still down almost 10% from their highs. If you lose this leadership group, they have the potential for the whole thing to snowball. That's just a fact. We've seen it at market tops before. I'm not saying we're at a market top, but I think the Facebook could be the first sort of thing that you really want to keep.
No, I disagree with that. That there was no
it's impressive.
At all.
I agree with you. It's impressive. But for instance, if you start losing legs of the chair, you know what I mean? That's when this stuff starts.
But seeing this leg strong despite a huge whack at it, I mean, does that make you feel better about the strength of technology?
Well, it was obviously a rotation into some other stuff. And I think it's important to go back and look at Boeing yesterday. Here's a stock that's obviously performed just like Amazon, up 50% of the year or something. It was down, 3-4% at some point, closed up on the day. There's money flowing into these things. It is a bit of a rotation, but I don't know how long that can happen, you know, that can go on for. But I think it's important to keep a close eye on.
I think investors understand that the Facebook commentary, what Facebook pulled last night, I mean, that's a complete shift in what they normally do. This is a company that's been incredibly consistent for the last 5 years, and they come out and pull the rug out from investors with their commentary about their margins. And it scared the heck out of people, I think. I mean, look, they're talking about managing this business long term, not quarter by quarter, all that stuff. I think people really believe, I think a lot of the bigger investors believe they sandbagged it. This is an absolute sandbag. It was directed for a reason. They didn't do it last quarter because of where the stock was trading. It was trading at $160. If they had done it, maybe the stock would have gone to 120. Given the fact it was at all-time highs, essentially, they do it now, and they get the stock back down to a 21 multiple based on next year's earnings, which I think is reasonable. So I think they're in trouble from the standpoint of the stock working for the next 6 months. They got to prove a little bit about this new narrative of the way the transition they're going through. But ultimately, I don't see the stock going a lot lower.
The new narrative is slower growth. I mean, that's just what it is for Facebook.
Yeah.
It's slower growth.
Slower growth, but their ability. So the question then, are they going to be able to attract users? And can they get a better margin from an advertising perspective because they're the choice and the go-to platform?
Back to Amazon.
Quickly, I mean, well, back to Amazon. Dan makes a good, listen, if you've seen one thing over the last few months, there's nothing wrong with taking money off the table in the environment that we find ourselves in. You know, is Amazon giving you a gift that it's rallied in the aftermarket? Maybe. I think it was wrong that it was down during the day as well. So if you net it out, we're basically where we closed yesterday-ish. I think the quarter is good enough for us to continue to have legs. The fact that the S&P continues to grind higher is remarkable. And the the VIX was lower today on what was a historic day for one of the biggest companies in the history of. I mean, that stock was down 20%. VIX closed lower on the day. That to me is there's something that doesn't really add up. To Karen's point, maybe it's just idiosyncratic to Facebook. I think there's something bigger going on, in my opinion.